Okay, hello everybody. My name is Taiwo from Forex is Freedom. I'm just going to walk you guys through the trade I took, which was based on a red news announcement from Donald Trump, where he was going to announce to the world that the coronavirus has had such an impact on the United States that they're going to go into a state of emergency. As soon as I knew that there was going to be a red news of this type, I knew that there would be a setup. The setups I generally tend to take are based on market maker traps. And what I mean by market maker traps, for those who don't know, is where the market maker will either push up the market or push down the market until enough retail traders open up positions so that the retail can build up the liquidity, the necessary liquidity that the market maker requires in order for them to open and close their own trades and make money. I'll get into more of that in other videos. However, I want to focus this video on the 100 pips profit that I was able to make from the announcement of the impact of the coronavirus on the United States. So first, let's just go straight into it. This is UCAD. This was the pair that I ended up sticking with after noticing that there was going to be red news. I saw the setup was getting prepared on this pair, and I knew that this was the one I was going to end up trading. So firstly, you can see that here on the Monday the 9th of March, price opened with a gap. If you have a look at that, you can see that the gap was 120 odd pips, which is actually quite a big gap. And this obviously has something to do with the oil wars going on between Russia and Saudi Arabia, but I'm not a fundamentalist trader. I'm a technical trader who just takes advantage of fundamental news as a catalyst to move price. So we can see here on the 4-hour, I'm just going to expand the screen so we can see a little bit more detail. Right, I've got the chart already actually marked up just so that what I might do really quickly is take off some of the markups just so we can look at the raw price. So you can see here where price has actually been making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows over the course of this week. So what this means is this is a bullish market with lots and lots of buy opportunities. This is a sort of market that you can literally make a lot of money from trading if you're simply just going to trade the standard break and retest of highs and lows and continue with the continuation moves of the bullish structure. This is what I like to see when I know that a trap is being set. I know that lots and lots of liquidity is entering the market in the form of buys. And bear with me, just put the markups back on, expand the screen. So from the 4-hour, I jumped down to the 1-hour. This gives you a little bit more view of the structure of the market. So firstly, let's look at Monday. On Monday, we see that a low of the day was set here. So we see a low of the day was actually set there. And what that means is if price breaks below this level, a lot of retailers will actually see that as a sell opportunity. And that's key here because you have to understand that most retailers actually do trade gap fills. So this would have been seen here as a gap fill. So if you just have a look here first, you can see that price broke below that level on a 1-hour candle, but then immediately rejected. However, price also broke this trend line here, which has been validated with a wick as a bullish trend. So as soon as price breaks below that, a lot of retailers are selling. So you see that candle there would have been the one that broke below, and retailers would definitely be selling that candle. Now, the next candle after that one is this candle here. Now, what this candle did is it actually not only had continued the bearish move after price broke this bullish trend line, but it also broke the current low of the day, which was also the current low of the week. And as you can see, there was a massive gap here. So there'll be a lot of retail traders looking to trade the gap, and they'll start selling. Now, I don't trade on Mondays generally unless I see a very solid move. However, I did look at the charts on Monday, and when I saw this sort of forming here, I knew that a lot of sell liquidity was entering the market. I also had an idea that potentially now price was actually just going to reverse. And as soon as I saw this bullish candle, which also engulfed and also broke back into the the bullish channel, I knew that price was going to start continuing up for the rest of the week. So price continued up. We have Tuesday. We have a structure going down to tap the bullish trend line again. It validates it as a strong support, and we see price fly all the way up, making new highs for the week. So we've got a new higher high. Price then continues down from this high on into Wednesday, and again respects the bullish trend line and also respects the current highs of the week, which it had previously broken and is now retesting as a support. So we have a break and retest, which is valid and confirmed for retailers that the price is going to continue up. So we see this new level here, which is Tuesday's high of the day, getting broken on the Thursday. So price breaks it, sort of plays around with it for a while, and then it finally breaks up, comes back down, breaks below, comes to the bullish trend line and does a very funny thing. It sort of breaks it on the lower time frames. So you can see on the lower time frames, or you can see on the hourly time frame that it's a candle, it's a wick that actually closed back above. But on the lower time frames, we would have had a lot of impatient retail traders selling these wicks with the belief that price is now going to start going down. But what we do see is after this bearish candle closes of a wick, another candle continues the bearish move for a while, but then it reverses right the way back up, and price continues all the way up, breaking the current high of the day and making a new high for the week. And this is what I'm looking at when I come to the charts on Friday on this pair, because throughout the rest of this week I've been trading gold, did quite well on gold as well. So I hadn't actually looked at UCAD because I couldn't quite see the structure initially, and I was seeing some really good moves on gold. And so when I came to this pair on Friday, I actually saw that price had actually broken above Thursday's high. So I'm going to go down to the 15 minutes so we can look at this a little better. This is 15-minute is really good for seeing the structure of how retail traders are getting trapped. So on the hourly time frame, what we see here was simply a wick. However, on the 15, what you can see is that price had gone up and then closed back down, and it had created this sort of zone on the 1 hour time frame. Now on the Friday, price sort of plays around this zone, and what's happening is we're seeing price break above the zone, retest the zone, and induce like as if it's going to continue upwards. So what this does, a lot of retailers are actually opening up new buy positions here, because when price breaks a level and then comes back to retest that level, as a support, this can automatically be seen as a confirmation for a buy, especially for a lot of impatient retailers. So what then happens is price reverses on all the retailers who were buying here, and they would have put their stop losses in this sort of area. So I actually saw this. I wasn't on markets when this was happening, but I came to the markets when I saw that there was going to be a red news announcement. And this is what I was looking at, and this helped me build up the story of what's happening. I circled this here red, knowing that this is where retailers had been trapped. And when I saw that price was again respecting the trend line, I found that quite interesting, because that told me that we are now continuing to induce bullish sentiment into the market. So as price came back up and price then broke the current high of the day and then came back below, I knew there and then that this was the trap being set. for Donald Trump's speech. So let's break that down. I circled it because what you can see here is a bullish candle that breaks the high, and it's followed by a bearish candle that comes back down to the broken SNR, or support and resistance zone, and it rejects it with a wick. So that's a break and a retest. Now what that does, it does two things. One, any retailers that put their sort of buy stop orders or pending orders to buy here have all been triggered into the market. And also any retailers who are watching the market and they see the break and retest, they now believe that this is their chance to get in on a continued bullish move of this ongoing bullish structure that has been making high highs, high lows, high highs throughout the week. So price then comes back down, and there's another level here. If I move this for you there, you can see the level I'm talking about. There's a few different places. You've got here, which was probably where the actual level is. You've got here as well. So I'm actually going to put the level here. Okay, what this does is it makes it quite obvious that you can actually see what's going on. So price comes down to this level. It actually rejects this level completely with a wick. And then this bearish candle closes above it, retests it with a very small wick, and then we get a bullish engulfing candle that goes up. Now this candle here are for the other break and retest traders who have their zones drawn in this area here. So now they're getting induced into the market, and they're also putting their stop losses in this sort of area down here. And again, that's given me all the confirmation I need to know that market makers are trapping more and more retail traders into the market into taking long positions. And this is a very obvious uptrend. And there are lots of zones that are being broken and retested as support in an uptrend. That tells retailers it's time to get into the market and buy. And what you also find are retailers will then be placing their stop losses in this sort of lower area down here. And this is very important for the market makers because, as we all know, whether you're a retail trader, market maker, or whatever you are doing in the market, if you open up a buy position, in order to close that position, you need to sell. And if you open up a sell position, in order to close that sell position, you need to buy. And a lot of market makers, unlike us, they're not, trading in, they're not opening up, 110, between 1 or 10 lots. I mean, they're opening up positions that are, 50 million, 100 million, 500 million. And, if they can't close their trade at a decent price, they suffer from what's known as slippage. And what that means is the best possible price will be the next price up. If they're, trying to close a sell, rather than getting the best price will actually reverse back on them, and they may actually lose out on quite a bit of money. So when we're talking about the kind of money market makers will lose out on, we're not talking about, £1,000, £2,000. We're talking about, 50 million, 100 million pounds on a 500 million pound trade. So they need to make sure that there is lots and lots of liquidity for them to use to close their trade. Where they'll be selling, they need market makers to be buying. And market makers' stop losses are where they are selling, because obviously if you buy to close, you're going to sell. So if a retailer has a stop loss for their buy orders, that stop loss will be a sell contract. And that's great for the market makers, because what market makers do when they're selling to close, they need to buy. So what that basically means is the retail trader who has a stop loss that is a sell order, the market makers can actually buy that when they're closing their trade. I know it sounds confusing and it can take a little while for your head to get around it, especially if you're quite new to trading. I will probably go over that a bit more in some other videos, but for now, let's just take my word for it. All the stop losses of these retail traders will be in this area and will be getting targeted by the market maker. So anyway, enough of that. Let's go back to the trade. So what I did, I saw that price was trying to go up, throwing wicks up here. In live market, these wicks are green candles, opening or moving above the zone, triggering more retails into buys, and lots of more market executions are happening as well. That just means a retail trader's opened to sell before the candle is closed. And I saw that when this candle closed, it closed with a rejection of this area. It also tapped this gray line here. This gray line here marks one of the key levels, 1.39750, which is a very key level, whole numbers. You tend to find a lot of stop losses, a lot of pending orders are sort of bunched up in these sort of areas. So these areas are also getting tapped as well, triggering more retails into the markets and also lapping up all the liquidity. I also saw this middle candle here. Very interesting candle. It's what people call a doji, but it's really just about indecision. Candle is neither going up nor down. So if you sort of pinpoint it, let's see if we can. There we go. So this candle right here, it's an indecision candle. And then you've got the next candle that rejects this area and closes bearish. Now, for me, that's a confirmation that we're going down. This is a sort of M formation at this area where the second leg is unable to break above anymore. So this is like an M formation within a larger sort of M formation. And then we have this candle. Now, when this candle rejects this area, and again, we get a wick. I'm actually just gonna do this 1 second, right? So we can see it a bit clearer. So this candle here, the one that opens at 7 p.m. It actually was a bearish candle that rejected this zone with a wick and was followed by a bullish candle, as if we're now going to make a new high. Now that tells me that this is pure induction, because none of these candles that are respecting this support are making any new highs at all. And in fact, if you look at the highs that they're actually making lower highs. While market makers are defending this zone area here, this tells me that we are going down. So I place a pending order after this candle closes, this bullish candle, and I place that pending order right here in the middle with my stop loss just above the wick of this bullish candle, because I can see that the previous price is now stepping down. It's not going up, we're not making new highs, so I know that my stop loss should be safe as long as it's above the wick of the previous candle. So I'll put all right, so you can see here, my stop loss was 20 pips stop loss for, I went for about 100 pips. I had my TP just at the lows of the day. I figured that what would happen is we would either make a new low or at least stop hunt the previous low. Now, one thing I'm going to say, I'm experienced enough to know that we are not, going to have a life-changing trade come upon us, whereby the whole market is going to completely reverse. If that was to happen, I'd be extremely happy if that happened, but obviously that doesn't always happen, and it's something that eventually a lot of experienced traders start to understand. When you're scalping the market, you're not a swing trader, and you should be definitely managing your trade. So I was happy to know that price would leave this area and come down to this area and stop hunt, especially the fact that it was Friday, especially the fact that there was only another 2 hours left for the market to be open. I wouldn't normally be trading at this time. However, I knew that this news event was going to actually pay some dividends. So we see price actually closed with an indecision candle. If I can just get it up there. Right, so we see price closed with an indecision candle here. there. That middle one there, you can call it a doji, whatever. And my pending order was here. And the moment that candle closed, the next candle just literally plummeted. So there was no drawdown. I got almost 50 pips. Well, in fact, I did get 50 pips straight away, and I closed partial profits of 50 pips, put the rest of the trade in break even, and literally, just before this close of the session, I closed it here, and that was for 100 pips. So this was a 1 to 5 risk reward. I was able to achieve that purely off the announcement of the coronavirus and Donald Trump's announcement of placing the US on a state of emergency. Obviously, next week, I'm not sure specifically which way the market will go because anything can happen in the markets. However, I'm hoping that price will continue to stop hunt the low of this week, next week, and continue down, taking out all the lows before maybe doing whatever the hell it likes. It might even fill that gap, it might not. But let's be thankful for what we were able to get out of the market this week. And for all of you guys who will be trading UCAD next week, I wish you guys happy trading. Thank you very much.